everybody, it's Chemo Savvy here, trying to update a video and see what kind of opportunities we see, and kind of some things based on timing that I wanted to share. So I'm going to take some timing measurements all over this chart, and we'll see what we see. So measuring out the rallies in green and the corrections in red. Notice some very interesting timing here with regards to 144 bars. 144 is fairly important in the Gann trading system. It's an important number that he discovered. He says it's one of his best discoveries that he's ever made. But yeah, 144 bars from the low to that high. And then we had a correction for 150 days before the rally that was 184. And then this correction is 144 bars. So that I find that pretty interesting, how the timing is equaling. It's pretty close to 150 for that. Those corrections appear to be matching fairly well in time. So what comes after this, if those do indeed match in time, and we do have a low that we're putting in place now, maybe we repeat this first leg, because we started, this will be your A, B, C, and then we have one more push matching this first leg. That's a potential. So the timing of that would potentially be 144 bars from this spot right here. And if we want to get that timing, we just have to clone the 144 bars and then drag it over here and line it up with that low. Sorry, right there. So if it does match that, the rally, this first rally, then you do an A, B, C, you have a rally up. If it matches in time, that puts us at the 28th of December for a potential peak. So could be good on timing. We will see. If it happens to match this 184 bar rally, then it could potentially go a lot higher and go for another month or two. So to add confluence to that, I'm going to switch this over to the line chart so we can get the closing price on the daily to add confluence to what we're doing. So we'll just take some basic measurements with the Fib extension tool. I'm going to measure this low on a closing basis up to this peak and project from the lows. As you can see, we tagged the 1-to-1 at 71.556. So those legs match very well. And then what comes after, what we would expect to come after, is the leg that was before the rally, which is what we've kind of done here. It looks very similar. It's kind of high and tight, showing a decent bullish structure as long as it can hold. But let's take a measurement of that. If we take the highest point of the correction, measuring it down, and then projecting from the high, we're right in the pocket right there of where we want to see closures. I personally don't want to see closures going below 50,000. Daily closures below 50,000 invalidates that, invalidates those two legs matching. So coming out of there, let's take some drawings of what we could potentially expect. So potential expectations is this leg is matching this leg. And then what I would expect to come after is this leg here to repeat up here for a target of 105. And that target is valid as long as the daily does not close below 50,000. So if that leg is to repeat, it could repeat backwards. And that's kind of the way that I would see it happening, is this leg right there, we've already completed, and we're doing that. Like this. Potentially into September or the end of August. Similar to the Ichimoku Cloud video that says that we probably don't break out until late August, early September. well, it might end up looking just like that. And then you have, whoa, we do not need that. Then you end up having the breakout. Then this back test. Some kind of back test right there. Before a similar resumption of the rally like this. Getting to target. Somewhere there, top end of the target is 126. Somewhere in this pocket is where I would expect this entire move to complete. Invalidation for that being the completion is up at the 1618. If you tag 160, you might be getting ready to move way higher. But until that happens, I'm going to stay conservative with the estimations or approximations of where this pattern can complete and how it might complete, what it might look like if it does actually rally up to there into the end of the year. The timing was saying 144 bars, which brings you to December 28th, and the 1-to-1 of this is there, bringing you to 105, 106, something like that. That's kind of been one of my targets for a while. I wouldn't mind seeing higher, but that's my conservative target as of now. Zooming out to the weekly, another idea for a target was taking this high right here of 64K. So just thinking about the number 64, what comes to mind? The Nintendo 64. So that was a 64-bit system. So maybe we're doing a ×2 here and going up to the next system of like a 128-bit system to give us 1, 2, 3, 4, 5 pullback of some sort, and then keep pushing to go twice that. 2 times 128 is 256. So 256-bit system, or the Shaw 256. Funny how numbers kind of pan out that way. Just something interesting I thought of. It doesn't necessarily mean anything, but maybe it does. But enough of the math. Let's get back to our current consolidation area, and we'll zoom into the rally off the lows, which I hope this ends up making a higher low on the weekly. That weekly close was a higher low, the way that I look at it. So from there, you just need a higher high. I don't want to see any weekly candles closing below here. That would show weakness, and it would continue the downtrend. So I actually don't want to see dailies below, like I said, 50K. Any daily candle close below 50,000, and that invalidates my trade setup, and I'd have to look for another one. But here on the daily, we have a very strong candle that went up, so I'm going to mark that off. This will become my order block right there. So you see a down candle and then immediate bullish candle, and those, you want to mark those off because that's where demand came in very strong. There is liquidity underneath there, so I'd be happy if that got taken, but we will see. But I marked that off, and now we will switch to lower time frames to look for the opportunities. So down on the 1 hour chart, the way that I would kind of construct this idea is taking a box. And I would draw out this consolidation box. And from there, we can see where the opportunity can potentially be. Inside the consolidation, you generally want to trade the edges of them on low time frames. If you are trading them, know your invalidations. Usually you want to take liquidity and then push liquidity to the other side. So we might have an opportunity for a trade setup for just that. This consolidation in the middle, this looks very well like an ABC. This move completed with this move going like that. Popped up, boom, so that gave me A, B, see if you caught all that. So that's kind of the way I'm looking at it. And now we're mimicking this leg. This leg is coming down, kind of grinding out the lows. This is coming down, grinding out the lows. So then what would come after? Potentially repeating this leg. And that would be a nice little accumulation if it happens over here. Purple. Before repeating this leg. And that's where the trade setup comes. So you have that daily order block that could potentially get tagged here. And if you get a reaction there, you could potentially have a stop loss there. It might take a few times to enter. You might get stopped out a few times as it hits the lows there, but I'd expect this to get back up into this consolidation. And once it gets back up onto support, there's your actual entry. This would be your stop loss. We'd be targeting this liquidity up here and potentially higher, but that's your first take profit, is this liquidity here. After that liquidity is taken, if price hovers up here for the rest of the weekend, I guess that would probably be a Friday, Saturday trade. It might just consolidate up there and back test this before continuing higher. So the way that I would trade this is this pops back up into the consolidation, back test support, you buy supports, see if it ends up being support again, your stop loss goes below, and then take profit here. And if this closes back inside of this consolidation, back inside this box, that would tell me that we're targeting this lower liquidity over here. And it would just fall off a cliff there. And then you've got some kind of ABC, and that may be your buy. But then you also need a reaction off of that. So you could catch a knife down here, but your stop loss must be below that low. And like I said, I don't want to see any daily closures happening at 50K. That would not look good. So mitigate your risk. We do not want to trade without a stop loss. Like I've said in previous videos, if this low gets broken, this could be turning into something very nasty. I think 38K was your first target for a potential bounce at support there, but I would expect lower liquidity to be taken. We'd be searching out the lower liquidity around 30K or something like that. So, but we'd see how it progresses. For now, we have a nice consolidation right here, and you can base your trades on that consolidation with a swing failure pattern that would hit that daily order block, come back up, you buy your support, your previous support, see if it acts as support again, stop loss goes there, because if that stop gets hit, you're targeting that liquidity over there, so, which is okay. If it comes down and grabs that liquidity, then goes back in the consolidation, that is your stop loss. So you try to buy that support, or if you find a better setup a little bit lower to minimize your risk here. But if you have many equal highs, you still got some liquidity back here. This liquidity is ready to go, but there's some liquidity down below. So we're just playing in this consolidation, grab liquidity, trade to liquidity, and maybe trade back down to lower liquidity before resumption to the upside or continuing down. You would have to trade it in the direction that you feel, but make sure you mitigate your risk. So if this grabs that liquidity up there, comes back inside the box, that is your stop loss. And you can short this. Down to this liquidity, that's your first take profit. If it back tests right there and gives you a reaction, this will be your stop loss. You short it there. Any break back inside this consolidation, and it's likely going up. So those are the opportunities I see just from a liquidity standpoint. So trade from liquidity to liquidity. If you end up getting a decent entry there, your stop loss is down there, first take profit would be up here, and maybe you go for all-time highs. Maybe we have the breakout. Like I said, sometime early September or late in August, based upon what I'm seeing. But don't get chopped up. If you don't know, if you don't have a good sense of where the chart's going, then don't trade it. Just wait for something that looks recognizable to you. For now, myself, I'm trading this. That's what I'm seeing, with a bounce and then come up for liquidity. So I hope that was helpful, guys. If you have questions, go ahead and leave them down below. Like and subscribe, share it. Let's spread the community. Thank you much.